Unconventional Wisdom, the CSE podcast, video podcast. We're going to have a good day today. Got a lot of things to talk about. First, let me recommend you go to our website, compoundstockearnings.com. Sign up for the free cow report. It goes out every Friday, and it's been published for over 20 years. And it has emails in there to all our folks from all our clients, asking questions, making suggestions, reporting on how they're doing. And you see all the answers from these folks. Plus, you can look and check out all the programs we have on the website. Every one of these gentlemen teach various techniques and have various seminars and such. And you can just get all that information. It's compoundstockearnings.com. If you want to call in to this podcast today, the number is 214-377-1108, 214-377-1108. And we have an exciting day. I think yesterday showed, I mentioned this on the session this morning with micro moment trading. Yesterday, they had a second session. They always have a morning session and a second session if the market warrants it. Well, yesterday the market warranted it because the Fed was going to make their announcement on the interest rate change. And so they were on there, and most of the people that were in there in the morning showed up. And both Tony and Micah were on the second session, and it opened. QQQ opened down 400 points. Now, what's important to realize is that's real losses. In other words, they just didn't show red 400 just for the heck of it. Those were people who actually lost money, which meant they bet the wrong direction. They bet, well, they're reducing the interest rate, the discount rate, so the stocks will probably go up. Well, they went the other way. So for a moment in time there, a lot of people lost lots of money. Did any of our people lose their money? No, not a bit. The reason is we're not trying to bet which way the market's going to go. Neither does Keith and Randy. So that shows you the importance of having a technique that is totally non-speculative in the decisions and the charting that it makes. Randy and Keith manage and avoid those kind of situations because they have the ability to manage a position if it goes down. Trade the moment, you don't, or momentum trading, you don't, because you're in and out, and you manage to do it. You just get in it, you get out of it. So anyhow, way up for the day. Micah just did an exceptional job, 38% yesterday afternoon. Tony was kind of coming in a little bit lower, about 23.7 or so, and total for the day in the morning session was 31, so we had a total of 92 or 93 or so percent for yesterday in returns. 147 for the week so far in micro moment trading. So, Randy, can you match that? Randy's not. Where'd Randy go?
No.
Oh, you can't?
No, that technique, the micro moment, is definitely the highest capable of producing the quickest profits of any of the techniques.
But you gotta be physical. You gotta be fast.
You gotta be quick. You gotta practice.
So you're probably not going to be able to do it. You'd mess up your baseball hand or something like that.
That's right. So I take it a little bit easier, a little bit slower. We do advanced starting momentum trade, which is the micro moment trading is momentum trading on steroids, and so they're just going in and out real quick. Momentum trading using the proprietary advanced charting from Compound Stock Earnings is identifying the beginning of the cycle, and right now we trade with the trend, and the trend of the market is up, so we're looking for calls, and it's simply finding what we call that sweet spot, the beginning of that new rising cycle, buying that call, letting it go up, and selling it for a profit. This week, during the weekly Monday morning live in the market training webinar, we usually find a position or two by going through 30 or 40 different charts that we keep track of. This week, I did not enter because of the Fed meeting announcement that was imminent yesterday afternoon. And for anybody that was watching the market for the last 2 hours yesterday, it was crazy. And that's why I didn't enter a momentum trade position on Monday, is have no clue which way that it was going to go. and it went both ways yesterday. It dropped significantly and then came back up to be down somewhat. Now today it's wiped out all of those declines and it's just going up. So that's how crazy this market is right now, based on just whatever the whims of the news media or central banks around the world are doing, and then the market's reacting to that, as opposed to reacting to company profits and company news and things like that. So today's a great rising day, and I did actually enter two momentum trades, short-term ones that used to be called trade the moment. And trade the moment is a little bit slower than the micro moment trading that the boys do. And so been getting profits on this rising cycle. I also do covered calls, and in the covered call platinum service, which provides a weekly live in the market training webinar on Wednesdays, we use synthetic covered calls so that we can sell in the money positions, deep in the money positions for the near week and generate income and return of capital. And so I actually did one on Beyond Meat that's been in a rising cycle ever since they went public a couple of months ago, and generated 11.1% return with return of all capital in 2 days. Got in on Monday, out on Wednesday. It was actually called out early. I didn't even have to close it out. It was actually called out because it was so deep in the money. And that's the key to generating the weekly income, is being deep in the money. That's different than the market. You go out and talk to the pundits in the market. That's not what they do with covered calls. They're speculating, trying to sell out of the money calls, hoping that it's going to go up. But we find the positions that are rising, but sell deep in the money, positive call return covered calls. So the stock could even go down and we still generate the income and get a return of our capital.
Let me tell you something about that Beyond Beef and also the Impossible Burger. I think it's Impossible Burger.
Yeah, today they're talking about Impossible Burger.
Yeah, so I'm reading an article, is it the Wall Street or somewhere this morning, about how beef, the industry really should take notice because it's probably going to go out of business. So I tried this the other day. I'm having lunch before I do every day over at Del Frisco's Grill, and they had real small on a rather large menu, Impossible Burger, and it'd be the third or fourth time I've ordered it. So I had this friend who meets me over there a lot, who's an oil guy and a big cattle guy. And he lives down in the islands where we do, and he had just gotten in. He was over having lunch with me. And so I told him, you got to try that Impossible Burger. I said, you're a beef guy because this is going to drive you out of business. So he tried it. He really liked it. I mean, it's just a fantastic burger. And he really liked it. So I'm reading this article this morning that was talking about how, very logical, how probably it's going to drive the real cattle business out of business because there's so much, people loving these things. And now they go nationwide in Burger King in a month or so. And Better Burger's going to start selling in the stores like the other one that you bought into. And that stock went up when they went public the other day, I don't know, 300% or something like that. Down a little bit. But
hey, Joe.
Yeah.
We have a caller.
Oh, a caller. Okay, great. Who's our caller?
Hey, it's Ed.
Hey, Ed, how you doing?
Pretty good. Hey, this is the first time I've been talking to you guys. I've communicated with you by email a few times. Really appreciate your service. It's fantastic. Unfortunately, I kind of started out using the web platforms for a few different trading companies.
Mm-hmm.
Well, I started out with the Trade Station, and then, I heard all these fantastic gains that Tony was doing in TD Ameritrade. So I switched over to them, and I was still kind of getting some crappy trades in the web version. And so I installed the Thinkorswim thing just over the weekend, and I've been having some fantastic gains this week. I'm doing the virtual trading right now. Can't wait to start with real money again. But had a couple questions for Tony, if he doesn't mind.
Sure, go ahead.
Yeah.
Hey, Tony, you're using the Thinkorswim, right?
Yep.
I was wondering, what kind of hotkeys are you using?
We can go over that. The main hotkey that I use is just to enter and exit the trades, and that's like you hold down Shift and then I think it's left click, and that is you're enter in and you enter out really quick, and it just you don't have to set up your prep or anything else like that. So that's like the biggest one that that I use. But you mentioned something that I want to touch on just really quick. You said you're doing really well on the paper money, and that's awesome. Now I will caution you when you're using the simulation training on Thinkorswim. It gives you very, very nice fills. And once you go live training, it's not that generous. So I want to caution you. I want you to be aware of that because it caught me off guard too. And so wherever you enter a trade, always pay attention where the ask is and write that number down, and then base your trade off of that. Because what happens in that Thinkorswim simulation model is that it'll fill you, 2 or 3 cents already in the green. So and then once you go switch over to real money, you're like, oh, what the hell happened here? You know what I'm saying? So so just I want to caution you about that because they have a really good paper trading account, but it's not the most accurate. But yeah, but back to your question, the hotkey, the main one I have, and you can go over all the ones that are set up here, but it'll take a little too much time. But it's just that hold down Shift and click, and then you just enter the trade really quick, and then you exit the trade really quick, and you don't have to go through the whole setup of your trade.
Okay, so you're going direct. You're doing the option chain to enter and to exit.
Yeah. I mean, essentially, you would, even if you have, if you're just doing the click motion, the click setup, the prep, and then you send you send the trade out. You do it right from the option chain as well, but you can just right click on that, and it'll automatically just pull up that prep for you. But you just hold down the Shift and click, and then you're in the trade, and it sends it away without having to do like 3 clicks. So time is essential. Time saving is essential on this micro moment trading. So that's the fastest way.
Definitely, I think it is key, and that is what I've been finding out, at least from the what I've been finding this week.
Mm-hmm. Yeah.
Or what I was doing is I was having to go over to the monitors tab and then look to see if my thing is filled or not, and then right click on the little icon or click on the little icon there and go down to like submit opposite order, and then it's like,
oh gosh, yeah, that's
too long.
that is a long process there, my friend. Yeah. So once you get filled, your Thinkorswim platform, are you on PC or Mac?
I'm doing PC.
Okay. I have Mac, so I'm just that's where I speak from. So I don't have PC, but you should still do it for PC. Where once you enter a trade, you should see a little confirmation window pop up and a little like ding pop. Also, the sound pops up when you are filled. So you don't actually have to go to the monitor. You can actually see the little window pop up where you got filled at, and you work from that. You should be able to see that on there, and without flipping back and forth, because that flipping back and forth is very, very costly in time, and it's going to cost you in cents as well. So
It really is.
do you have that set up, the little window when your trade fills, does it pop up in the upper left hand corner?
Yeah, I've seen it, but then it like disappears after a few seconds. So you're saying I can like right click on that?
Well, you can click on it, but just look at where you filled at on there. You can take a quick glance and take a look at it and see where you filled without going over the monitor. And then because you need to stay on the option chain screen the whole time. So, but what I would do, and this is what I did with Thinkorswim, you call into TD Ameritrade and have they schedule a time for you, and it's about 40 minutes, and they will go through any questions you might have, what you can set up, how to set up your screen. And it's very useful, and it's really I advise using that because you have a better understanding of where everything is, and then it makes you more efficient. So call TD Ameritrade customer service, and they'll schedule a phone meeting, a phone conversation, and they'll go through all that with you.
All right. Hey, I thank you guys for your service and your time, and thanks for your military service as well.
Yeah, appreciate it. My privilege.
Bye-bye. Okay, get back to when, before we had Ed called in, Randy had been talking, and I was going to point out that all these trades that Randy does, he's doing it in real money in his accounts. And you subscribe to his service. What was that? Is that those micro things trading?
Yeah.
Good Lord.
Hi, I'm calling with a couple of questions.
Oh, okay. I'm sorry. Is this still Ed?
Oh, no, this is David.
Oh, David. Okay. Hi, David. Glad. Appreciate you calling in. What you got there?
Oh, well, good morning. I called in last week. It was very useful. So I've got a couple of questions. First one is probably for Randy. Randy, I've studied with you in both covered calls and the advanced charting. Took the advanced charting a couple of times, 2 or 3. And since I last studied with you on that weekend seminar, the charts have changed. And now there's only the 1 column versus what you used to have is the 2 columns on the bottom. And I guess the question, maybe you can help me understand them. And I'm assuming, but I don't want to, assume, I'd rather know that it lines up similar to the way your trade the moment charts do, where you've got E1, 2, and 3, confirmation comes from 1, etc. But in any event, if that makes sense, that is my question.
Well, Dave, there really is still all 8 of the lower indicators. You just have to select chart 1 from the drop down, and then select chart 2 from the drop down, and move chart 2 over, and then you'll have chart 1 and chart 2 both up, just like the old screen. So you can still get all of them on there.
Okay, good to know. And the next question is for you, Tony. This morning was really good explanation on how the charts line up and what you are looking for and where you're getting the confirmation. And so well, in any event, that was really helpful.
Oh.
There are times when I notice you hopping back in during a rising trend, and I'm curious what you see when you hop back in a moment or 2 after closing out of the first position, that gives you the confidence to go back in even though it's at a higher price.
Yeah. So a great question there. So like today, like right before we hung up, there was a trade. We made that one trade, or sorry, the last trade we made before we hung up. We got in on the green arrow. Okay, that was like our 4th confirmation there. Great trade, and then it kind of took a dip. If you saw in E1, it kind of took a dip, a little bit of a sine wave, and underneath blue, and then it came right back up and crossed blue, and then pushed very hard upward, like 25 cents actually. So very strong pull out. What gives me the confidence to go back into that trade is, well, number 1, the E line, E1, 2, and 3, they're all lined up accordingly. And then you can kind of, the next part is a little difficult, but the more you do it, the better you get at it. You can kind of tell at which how much E1 vertical red is, and then how you base that off of is the relationship between the tick and the Bollinger Bands. And if the tick is outside of the Bollinger Band, pretty much at any point, you know it's going to be fairly volatile, okay? And you're going to get a lot of price fluctuation once the tick is outside of the Bollinger Band, because the Bollinger Band is based off these moving averages, and they essentially really haven't caught up to the movement of the tick. So when you get that strong push upward or downward from the tick, and then and you're kind of predicting that by watching E1 crossing into blue, you can be fairly confident that you'll get a nice return, and that's what gives me the confidence to go back into that trade the second time. But sometimes it doesn't always work. Sometimes you get 1 or 2 cent losses, but that's not a big deal. But today was a great example of having confidence going back into a trade. Now I didn't get back into the trade, but you could have. We weren't. If I was just going to sit there a little longer and wanting to pull the trigger there. So those are kind of the things that I look for to gives me confidence to hop back in after I've just closed out a trade.
Okay.
Well, thank you. Really helpful.
Yeah, thank you.
Thanks for calling in.
And okay, thank you guys. Well, is it okay to ask one more question?
Sure, go ahead. No problem.
Oh, good. Okay. So this morning, both of you hopped in shortly after the market opened. And maybe a similar question, because there seems to be more fluctuation and more volatility in those early moments. What is it there that gives the two of you the confidence to jump in early, despite the despite that big push up, push down, and volatility that I'm seeing happen moments after the market opens?
Micah, you want to answer?
Yeah, for me, it's definitely a cautious time, because it is the most volatile of the entire market, as you're fully aware, those first 3 minutes. So we try to at least make it past the first 2-3 minutes. But even minute 4 or 5 is still really early for what we're used to. What makes me hop in something like that is when I see as much agreement as possible. So usually we avoid it. But if I see that all the lowers are heading in the right direction, we're stacked in the direction we need to be, the market's in support of it, my whole watch list is the same color, there's when everything goes that way, then there's a chance that I'd be willing to enter something like that. That's the only thing that will even get me, starting to look at it. And then once you make that decision to cross that boundary, you have to be in and out so quick. Like that first trade I did we were in and out, pretty darn fast, and it was 6% loss like that. And had I held minutes longer, it would have been, 10-20% very easily. So all of the danger stock trading comes from staying in a negative position. Like if you never lose more than 3-4 cents on a position, if you know you're never going to lose more than that, then all this scariness of the market open, anything like that, goes away. And the reason we usually avoid it is because it's difficult to fill once that position turns around. So I was actually kind of lucky to get out today, and we made some really good trades at the beginning, but they're the easiest ones to lose on for sure. So really, it's just a judgment call. It was also the fact that yesterday we had tanked so hard. I figured there was a little bit of recovery left in it, given that the market was opening green. We had tanked like $5 or $6 on everything, and we were still heading up. So that's why I pursued the call today personally. But it's always different. There has to be a lot of agreement in the market for.
Yeah. Yeah, I agree with all what Micah said too. I want to add is, the big factor was for me was the movement. If you saw the movement, the price fluctuation right off the bat when the market opened, it opened positively and it just kept climbing positively. There wasn't really any back and forth, and the market opened, I think, like at $1 or something like that, and then you just saw it gradually climb, and it didn't really, reset or reverse. So when you see that kind of a pattern, you can confidently enter a trade and see a good result from your entry there. So, and a lot of that has to do with fundamental factors, like Micah said. Yesterday was a bad day for with the interest rates not being as high and stuff like that. So you can kind of get a pretty good guess that it's going to come back around, have a little bit of a reset from all that negativity. So all those,
Which is pretty much had most of today, but we were just a little bit early on the jump. But everything's up. Apple's up $4, Q's up 360, and IWM's up $1.43. So we had the right idea. It's just.
I think Tony just made. Is that you, Tony, on the QQQ, the 14.1%?
Yeah, just did that on here.
Yeah, Mike did this few broadcasts ago, and Tony did this time during the broadcast. He made 14.1% on the Q trade. Fantastic. Yeah,
it's just going like this today. So,
do you have any more questions?
No, just one comment. Micah, just if you feel bad about the 6%, I lost about 20% because I guess, to use your coinage, I got snuffed. And for not following the advice you guys give and not getting out quick, and I'm new to this, and I just started to trade small trades or small number of contracts, luckily today. And, but it was a real good learning moment. Hopefully that it's why what you say is so important, to get out really, really quick and not let your emotions take over.
Yep.
Yeah.
Yeah. And sometimes, it bites you a little bit. My last trade of the day, I got in at 159 and out at 160, and it was at like over 180 just a couple minutes later. So I made 1 cent where I could have easily made 20. I was in the position ahead of time, everything was there. But because that same methodology is, to behave like that, it wasn't really pushing up that strong. I wasn't super convinced, so I hopped right out. I would rather lose opportunity cost. Like, I would rather lose out on money I could have made than lose the actual money I have every time. So over the long term, it will work out for you, but it can be, a little frustrating at times too. So.
Well, what is it that you guys see when you like at that moment, Tony, when you got out much quicker than I did, that the fluctuation? So what signs do you look at in your platform, columns, etc., that tell you this is a really volatile time and the price swings are really high as opposed to other times?
Which time are you referring to?
Well, this morning when Tony had his trade where he lost about 6%, and I got emotional and I stayed in longer. And after while I was still in, I think Micah, you made that trade. You commented that the price swings are really large, and the tick is moving really fast.
Look at the. Oh, sorry. Look at how much when the tick moves. Watch how much cent gain and cent loss is associated with the tick movement. Some days you can see the tick movement. You watch your screen. You're charting, and then you watch the option chain platform here, and it's moving up pretty quick, but it only moves 2 cents. Okay, like today, it was moving pretty fast, and it was moving like 10 and 12 cents in less than a minute. So just kind of that, and then also you can tell by the delta, how high or how low the delta is for the day. You can also look at the volume, different factors of how you can tell volatility and price, how fast it's moving, and price fluctuation and stuff like that.
Yeah, I would say the same thing. The option chain can tell you so much. What I call them frames, but it's basically every time the option chain updates. So the 195 call on Triple Q right now on E-Trade is 83 cents and 84 cents. Now just the ask just switched to 84, then 85, and each time each one of those numbers changes, that's a frame. That's an update of that. The updates this morning on the winning trade I did to recover, I got in at 78 on the ask. The next frame update was 80.81. The next time it updated was already 80.81, and then the next time was I think 82.83. So each frame jumped significantly. Usually it's a caterpillar motion of the bid coming up, ask going up, and when you see it skipping beats like that, that's the biggest sign for super intense volatility, because trades are going off so fast that even though that updates multiple times a second, it's not enough to show all of the bid and ask adjustments. Because if they showed it all, you wouldn't be able to read the numbers because they'd be flickering so fast.
Yeah.
That's a good thing to watch for is the actual bid ask option prices.
Okay.
Helpful.
We appreciate
Really
you calling. Thank you.
Good.
Okay.
Thank you, guys. Really appreciate everything.
Thank you.
Thanks.
What I was talking about, Randy and Keith, when they're doing their trades, these are real trades, and their own money in their account. And you get these notices, exactly, just like in the micro moment trading, when they prep something, and when they're getting ready to execute it and what they're getting ready to execute it for, and then when they exit. And all those trades show up in the Cal report every weekend. Remember, go to compoundstockearnings.com and sign up for the free Cal report, and you just find out all kinds of information. Plus, you find out all kinds of information about what these guys are all up to. So, Keith, we hadn't been ignoring you up there. Oh, and hey, by the way, people listening, it's a YouTube, and you can write in. Mike is our official YouTube communications officer, and if you want to send something in, what are you showing me that for, Mike? I couldn't see it. Did it blow up? Do you have some messages?
No, I was just showing the screen. We don't have any messages yet, but I was showing where I read them from.
So, Keith, like I said, we've been ignored.
That's all right.
Been quiet. What's going on?
That's right. I'm concurring with a lot that's being said about the markets and the charting and what's going on, and just trying to follow the rules on what I've come up with for the CSM trading. And it just you get strong moves both like yesterday and today, and that's not good for my my trading, because right now I'd like to get into a put, but it's such a green day that it's usually a very risky proposition to do that. So anyway, taking a look at that, and trying to come up with some good trades coming up here, which I think will be coming.
Okay, great, super. Hey, Marcus, does this YouTube, does this stay on here forever? I mean, do these look like the radio shows do?
Yeah, the YouTube stay on there unless we delete them, which we don't.
Yeah, but I mean, people can come back and see this one anytime after today, right?
Yeah.
Time after today, right?
Okay, good. Just want to make sure. Hold on. I'm surprised you don't have any messages there. What's all that? What's all that noise?
Okay, I've got this set up. It looks like Skype is coming straight through. So we just got this caller. I don't know who this is. Caller, are you calling into the podcast?
Hello.
Hi, are you calling into the Micro Moment podcast?
Yes.
Okay, well
Okay,
you're
great.
on
What's
with
your name?
you're on with Joe.
Hey guys, how are you doing?
What's your name?
Yes.
Okay, well, you're on with Joe.
Joey,
Hey, yeah. What's your name?
how are you?
I'm doing good. Are you anonymous?
No, Joey is my name.
Oh, Joey. Okay, I'm sorry. I thought you were calling me Joey. I have a few people call me Joey sometimes. Hey, what can we do for you?
Yeah, I just started using the micro moment trading last couple of weeks, and I just want to ask the guys, how are they dealing with all the commissions? Because I can tell you, like for instance, the last 3 days I've traded, I've made a little over $1,000, but the commissions eat more than half of that.
Oh, yeah. What service or what broker are you using,
E-Trade.
Micah?
Yes, I mean, it depends on, I mean, so many things go into commissions. And your finances are totally private, but the things to consider are things go into commissions. Oh, I can hear myself. That's odd. There's a fixed commission to start with, and then a per contract commission. So part of that to consider is your strike price selection. Why we pick it where we do is oftentimes we have to buy fewer contracts, which results in less commissions. Also, commissions are negotiable. So you can call E-Trade and say, they can see your account. So you can say, hey, like, I'm thinking about going to TD Ameritrade. Your commissions are too expensive. I make a lot of trades with a lot of contracts, and this just isn't doing it for me. They're a business just like anyone else. So they're going to say, oh, no, sir. You're at customer service desk, basically. They're going to say, oh, no, sir, let's figure out what we can do for you. And most of the time, they'll actually lower your commissions. But focus on the per contract commissions. That's what's going to really save you the most money, and what's hard to think about. You see that number and it's 50 cents or 65 cents or 30 cents, whatever it may be for you. But that's per contract. That's every time you hit that quantity up button, they're dinging you for that. So yeah, I would definitely call them and get your commissions down as low as possible. And then in another 3 months, call them again and do it again. So
yeah, and make sure you say that you're a high volume trader. You trade per day, high volume trader. You trade a lot of contracts, and start with the price. It's like I need this to be down to at 40 cents. So it sounds like you're probably in 75 cents. That's astronomical if half of your winnings are commission. And then have them lower that overall commission. It's like, I don't know if it's like $7 or something for E-Trade, but lower it to like $4. They have a lot of wiggle room, so you negotiate with them.
Hey, Joey, let me ask you a question, Joey. Even with that huge commission expense, what was your return on the net 500? You figure after commission?
I'd have to go back and calculate that, but I would say, I've made, I'm trying to look here. I've made,
it was still probably pretty
like somewhere around like say 10 to 12 trades in the last 3 days. And, I was trading typically about 50 contracts per trade.
Yeah.
So,
what I was going to say is that probably is still a significant return, even with those horrendous commissions in there. So.
yeah, the percentages.
it's somewhere around say, $500 return on the different, 10 to 12 trades in the last 3 days. So.
Well, how much was totally invested? over that period of time?
How much was totally invested? And
You probably had like,
I'd have to add all that up.
yeah. I mean, he probably had 4 to 5,000 at risk at one time, and then
Yeah.
and then he's probably made by just doing quick math, probably 30%, probably right over the last 3 days.
Well, I'm looking at the count here, and I guess the net amount. The net amount traded was a little over 40,000, and so $500 on 40,000. So it's really not that big of a percentage gain, and that's where I'm sort of wrestling with is like you're doing the gain is if you take the commissions out, the gain is lower than the actual commissions.
Yeah, and that's also a balance of your per trade percentages. So as you get the number of trades down over your net percentage, which is just volatility, it's really out of your control. Like we say, stay in the trade the same amount of time, and the volatile days are going to yield a higher return per trade, which obviously if your percentage is higher per trade, you're in less trades, paying less commissions. But Dave just commented and said, I use TD Ameritrade. I was at 345 plus 40 cents per contract. I called, they lowered the per contract to 25 cents. So from 40 to 25 last week, and they said they would likely lower it to 10 cents after I ramp up my daily TTM trades.
Wow.
So, and I think TD starts off at 65 cents.
Yeah, about 65 cents. Holy cow, I'm going to call my guy.
Yeah, that's crazy. So the reason for that is how intense this trading is in retrospect. Because PDT is 3 trades every 5-day period, right? So at 3 trades a week, you're considered a high volume trader. Like that's a lot of trades. And we're doing 5 or 6 a day sometimes. So they want you to stick with them. And yeah, that's from 65 to 10 cents. That's a sixth in commissions that you'll have to pay versus what you're paying. At least, 3/4 of that will get chopped off. So.
Okay. Well, thanks, guys.
Good job. Great trading, especially for being brand new to it. Like, fantastic work. That's excellent.
Do you have any other messages there, Micah?
No, just comments on the callers, people responding and stuff.
Okay. Get us off. Well, if nobody else has anything of great interest, I think it's been a great podcast today. A lot of good information, good. So we can talk about, cutting it off. Anybody got anything, last comments?
Nothing here. Ben just said you'd want to look at the average return on each trade. That is true. Allocation is a huge part of it. And the percentages are all based off of, like for instance, our percentage that we've done for the whole program, we haven't multiplied a single account that we're working off of 18 times since we started. We're not working with a singular account that we multiplied by 18. That's a per trade percentage. So
turn ratio, it is something like.
Sorry,
I forgot my mic was on. You can ignore me.
You're good. So yes, I forget where I was. Yeah, it's a per trade basis. So also the trades that we're more confident with, we might size in a little bit heavier too, different things like that. So that's why we operate based off percentages, because everybody's working with a different size account and different allocation. So Carrie Davis just said, how do I get started with micro moment trading?
Well, you need to send me your email, because I send out every day a summary of what we've done and an explanation of what we've been doing, what our returns are for well, now to be the last 13 weeks as of tomorrow. And there's also a sign up link there. You can just hit that link and that'll start the process. You can get signed up and we go. I just had a notice here. The Dow's up 300 points, 300.21 points. So it's still getting a lot of stuff from yesterday, I guess.
Yeah, we haven't had an insane spike. It's pretty much flat at the top here. I wonder what that's from.
I don't know.
Just been going up all day. It closed down 334 yesterday, so it's just about come back up to where it started yesterday. Big swings. That's where the volatility comes in, which is great for trading the moment, because it's going up and down and up and down and all over the place, and you can get in and out real quick and make some real good profits.
It was so slow, Randy. It was so slow a couple of days ago that we didn't even do a trade on the micro moment.
Yeah, they were waiting for the Fed announcement.
Yeah. So
one more. My CSE charts appear to be getting stuck sometimes. Can you comment on what to do when this happens? I've actually noticed this too. I was going to ask you guys about it, but over the last couple of days, it's been caught up and then starts to lag behind a little bit. So I don't know if that's my personal internet. I think it happened to you, Tony, as well.
It happened when it was super volatile yesterday, real briefly, but I haven't had any issues since.
Yeah, Dave, I simply just refresh the page and it brings it current again. Yeah,
that happened to me too yesterday, quite a few times yesterday afternoon, but it hasn't happened at all today.
Yeah.
Yeah.
Just when there's an influx of data as much as was yesterday evening, comes slower. Deshaun, I'm on E-Trade, but using Power E-Trade, do you think it would be beneficial to roll over to the E-Trade Pro? Power E-Trade, I thought, was the newest. Your thoughts? Power E-Trade is the newest. I believe that's the platform they crossed over from when they bought Trade Monster, which is actually the platform I started on years ago. And it's a good platform. It's definitely options focused. It was through a company called Options House. So it's a great platform, and if you're comfortable with it and it gives you the speed you need, use that. If you want to try out E-Trade Pro and think that you can maybe get faster maneuvers, but platform is really down to what your comfort zone is, and give them both a shot, but do what you're easiest in for sure. So I've tried them both, though, and I do like E-Trade Pro a little bit more. And I don't think Power has hotkeys he uses. So if you want to do hotkeys, I think you'll have to go to E-Trade Pro. Man, we got a lot of questions. Do we have any time for more questions, or are we cutting it off?
Go ahead.
They're starting to roll in now.
I'd like to keep this at an hour, and we got about 10 minutes.
Joe, I got to run.
Okay, we'll see you, Keith. Thank you very much.
Bye, Keith.
All righty, I'll roll through these quick. Joey, Ben's giving you props. He says good work. Sounds like you're doing really well overall. Micah, you mentioned your watch list. What symbols are on your list? It's not so much the symbols, just anything with power over the market. Huge market cap I got, and then anything super hot. So right now I have Apple, Beyond Meat is up there because it's affecting the market. Tesla, Triple Q, Goldman Sachs, IWM, Google, Citibank, Bank of America, and SPY. I like to have, a technology, a financial firm, some indices, different things like that. Just a general list of the tops. Is anyone checking on prices for a cruise to Santorini?
Get back on that.
Get back to you on that. All right, moving on. Studying my advanced charting manual. Presently started rereading about the 8 lower indicators. I was wondering if any of the L1 through L8 indicators corresponded to E1 through E3 indicators on micro moment trading.
No. Similar but different.
Similar but different.
You read them similarly. You're looking for when red crosses above blue going up or going down, but they're totally different indicators altogether.
I just had a text from Dirk. It says, I was planning on trying to go down to Puerto Rico this weekend. It says, don't get a ticket to come down here yet. There's a hurricane coming that could hit on Wednesday. So when I get over to the grill today, the grill to have lunch, don't anybody ask me why I'm not in Puerto Rico, because every day they ask me. I'm getting tired of coming up with excuses. Now here's my latest excuse. Dirk says don't come. Okay. It's exciting. You got some more? You got some more there, Micah? Hey, Micah, you have some more? Don't hear you, Micah.
There we go. I was muted. Sorry.
You got some more?
Yes, it would be helpful to know when I'm restudying the lower indicators. Also, the L's are for lower in advanced charting. What do the E's stand for on the micro moment chart? Randy, is that a question for you? I don't actually know what the E, why they're called, why they switch from L1 through 8 to E.
Make it be a different letter because it's a different indicator.
Okay. Yeah, I believe that was just for the differentiation for the earlier question. You know, we had to change them from one letter to another to show that they were a different indicator. So, and then one more for Tony. I watched the bid and ask closely. When you enter a trade, you consistently get in lower than what shows up on the chain. You always put in a limit for lower than the ask ? And thanks so much for all you do.
Not really sure what the limit is under the ask, but the reason why it does come in a little lower than the ask is because I did enter that trade just before the movement that you see on this, like before the movement that you see happening on your screen. So I'm over here fidgeting about trying to get in at the price I want. And then once I get in, it might be a cent or two different than what you're able to do because of the time difference. And we've gone over this multiple times where, you know, if I'm constantly sitting over there saying, all right, I'm going to adjust back down and try to fill here, this or that, that's going to be a lot of chaos. It's already pretty chaotic over the air. So we try to give you a very streamlined answer of when we fill. And instead of going through the whole process of how to, you know, it's not really a whole process, but we're just going back and forth between the different prices to get a fill. And so we try to eliminate that confusion because we know we have new listeners and it's already can be kind of confusing at the beginning. So yeah, there might be a cent or two difference than what you see on the chart by the time I say it, so we can get a clear fill. But every time this point is brought up, I always try to reference to why we are entering at that point. The key lesson here is to understand why we are entering where we're entering, because you can take that away after the webinar is over and you can practice on yourself or doing it yourself. And the reason why I'm entering at this certain trade is because from what the charts are telling me, it could be, you know, a very profitable trade. So the key is not to really know, or the key is to not get caught up in the pricing of when we enter. Okay, the key is to understand why we're entering at this point, so then you can replicate it yourself. But yeah, that's probably our most common question. Why is our price different than yours? I mean, there's an inherent delay from what we see and what we can communicate in time to you all. So that's the answer for that one. But just try to take away why we're entering at that point, and then replicate it yourself.
And the biggest differentiation is we are a teaching service, and I know we talk like an alert service sometime, because we say terminology like if you're still in this trade, and such, because we are very aware of the fact that if we're making trades like this and the returns are coming in and people are watching us, and people watching us pretty much live, then they're going to place trades on our positions. But we are in and out of things so fast that, that there comes a lot of risk with that. We don't ever tell you to enter the trades we're entering. We just want to make you aware that we are, entering or exiting a position, and we are, an educational and entertainment service legally, because we're not professional registered traders. So what you do with that information is hopefully learn so you can execute the trades yourself. And then every once in a while, if you want to go in a trade with us, that's totally your call. But just to make that clear for.
When you say we're educational entertainment, now I've not heard this entertainment aspect of it lately. Does this mean you're going to do the singing and dancing and stuff, or what?
Yeah, no, that's the terminology I've seen on, I keep up with a lot of, everybody wants to teach people how to trade stocks nowadays. There's so many teachers. And that's the new disclaimer that I don't know, maybe we should actually look into it, that adding that to our disclaimer. They say they're for educational and entertainment purposes only. Because there's some SEC ramifications that I think affect even if you're teaching. So
but remember, Micah is a karaoke champion.
Yeah. Right. I mean, we have that official,
The horse is dead, guys. It's very dead. Leave it alone.
Yep.
That's funny.
Okay. Do you have one last one? You still got a couple of minutes.
Yeah, Micah, nothing ever gets forgotten. You'll never live that down.
I really won't.
Well, now, wait a minute. Hey, Marcus, wait a minute. Your band, remember, we were going to schedule having you on here. Maybe take a little break after 30 minutes or something. Your band could come in there and, what's the name of that band again?
What's the frequency?
What's the frequency is the name of the band?
Yeah, WTF for short. See, what's the frequency is the name of an REM song.
Oh.
Yeah.
That's awesome. Okay, and then one more for you, Joe. Joe, the hurricane isn't coming until next week. Come on down. Bought 10 cases of water today, so we'll be fine.
The last time I heard that, I went down there and I was trapped for 8 days with no water, no electricity, no nothing.
Yikes. Yeah, I don't know who that's from. He's under a username. So
yeah. Okay, well, thanks, everybody. Go to the website, compoundstockearnings.com. Get the free cow report. It's been around 20 years. You'll see all what these guys are doing on there and what all our services we offer. And we really appreciate you being on here today. Appreciate Randy being here and Micah being here and Tony being here and Keith being here and Marcus live on the screen that just pulsates when he talks. That's how exciting he is. Must be exciting when the band's playing. I mean, if this thing pulses when he talks, it's the band. I mean, it'd be huge, Okay, well, thanks, everybody. We'll see everybody next Thursday, and we'll see you guys in the morning. And listen, if you're subscribed to the service, you're on this podcast, it's still cut on. And if these guys elect to come back in a little bit for an afternoon session, then you will get notified via text message before they get there. So you'll be able to go back, and the screen will pop back up, and you can possibly do some trades this afternoon like you did yesterday. So, and there it goes by, perfect timing. There goes by my chimes. So
there you go.
We'll thank you. Bye-bye.
Hey, hope everyone has a great weekend.
Yeah, you too. See you guys.
See you next week.
Yeah.